Hello guys, so today we're going to look at the the DXY, the dollar, and see what we are likely to get in the coming days, maybe this week, or focus. So on the dollar, when you look at it in, first of all, it's trading below the range, which is I'll call it a discount level according to us, where it is. But when you look at it in the past, it has been bearish, and currently, the most recent move here, we can say the last move is where supply happened to exceed uh, demand and price dropped. And right now, price, when it dropped, if you look at the most current area, you can say price dropping here, it is in terms of higher time frame direction, it's dropping back below the range. And what we have here, we can look at this, the last high, high, the high low, and this is a high. In terms of direction, the last lower pivot is still respected, and you can say most areas here, they have been mitigated. You look at price, already consumed this demand here. And if this demand was consumed, then the last pivot that is still active as for now is this particular one here. But now what we want to see is that when price dropped below the range here, when we look back here on our left, we can see that price currently sitting on a monthly demand, right? On our monthly demand here. So in this monthly demand, where the price sitting here, and also you're below the range, below the range. So if you are below the range on a higher time frame, this means that we are below equilibrium in terms of how we interpret the price here. So the last pivot point here, this was the last one that was used here. And maybe if we look at this on the past, there was no significant strong demand here. And possibly you can say those who trade support and resistance, they could be able to figure out this one. Price was currently sitting on this particular area, right? This area. Personally, I don't trade support and resistance. Sometimes we just use them as areas to see where price has been before and it's expected to go. If you look at those who look at support and resistance, how they interpret price, this is where they were looking at, right? This is where they were looking at, and price already broke here. And maybe in their way of looking at the market, maybe they were looking for the price to go back, retest, and keep dropping. I don't know. That's how they see it, but I look at it differently. So here, for me, I'm still bullish, and because I'm below equilibrium area, price sitting on a monthly demand. So the other factor that you're likely to see on this particular structure here is a reversal pattern that's happening here. If you look at this, is what we call the monthly engulfing candle. Whenever you see this particular type of candles here on higher time frames, they mean a lot. So the market is sitting on a key level, which is a monthly demand, and it's showing you what we call uh, an engulfing candle. This candle covers the previous candle, both the, the top part and the lower part. As you can see, the price was massively dropping into the demand zones here. And since demand happened to exceed supply here, because if we did not have demand here, this price could have not gone up. And if we had supply, price could have gone lower. And if there was no demand and supply, maybe we could have a range around this area. So here, price dropping into this demand and the demand holding it stronger below the range. And last month, I think last month, yeah, this when we got this engulfing candle, and this candle just came back here. Mostly when you see these engulfing candles, when you scan inside the candles, you'll come up with stronger levels. So right now, for us to be convinced that this demand is holding, what you need to see here is if you have this as your key area, let's say this is your demand on a higher time frame, and the price drops on that area, like that. You know, when the market is dropping most of the time, we are looking at the impulsive and correction moves. Impulsive, correction. Impulsive, correction. That's what we are concerned about. So this was an impulsive into the demand. But if demand becomes stronger than supply, then instead of this being a correction, it will turn into an impulsive. Then the new correction will start showing up. Then impulsive, correction, impulsive, correction. And this would be acting as your pivot points, all right? The strong lows that shows you that the price still intending to go higher. Mostly when you have two high highs and two lower lows, by default, the trend has changed and maybe you're having a strong bullish move. Or sometimes you can look at it differently. If you look at this, can have what you call the head, the left shoulder and the right shoulder, and this called the neckline. If you want to interpret it from that angle, then once the neckline is broken, then expect the price to keep going higher. But we'll not go into that. That's a different topic. Let's focus on what we have here. So our work here is to go lower, right, inside this area. And what we're interested here is, if this area is strong, first we'll have to refine the monthly demand into the weekly. And we are more concerned about identifying what? Impulsive correction. Impulsive correction. First, be convinced that this demand is holding. And as well, if we have a higher time frame engulfing candle, then automatically by default we need also another pattern on a lower time frame. And the lower time frame inside this area, there's a lot you can see here to have a confluence. Maybe the price can have this, create the shoulder, the head, go higher, create again the right shoulder, then go higher and break the neckline. That's something that you're likely to see here. If not that, then you're likely to see this, the last tap, price goes higher, then returns and gives you a double bottom and go higher. That's another factor. Another factor, you're likely to see a hammer candle here, a candle that is looking like this. All right, a candle that looks like this, that taps on the level, taps on the area and gets rejected and closes almost at the opening. Then this shows you that sellers are control all the way, consuming and fill the orders. Then once they close up around the opening of the previous candle, want to see a massive, explosive, high-speed green candle moving away from the zone towards this confluence of institutional footprint, and say that here the institutions have started stepping in and now can start preparing for a long position. So on the dollar right here, when you go lower from the monthly, let's go to the weekly time frame first, work on this level on the left. Here, now if you go back on our left here, see these lot of things here, but I'm more interested to look at this area here. There's a reason for that. Picking this area more comfortable. And I look at this area here. That's my weekly demand. Let's see, you see price taps in, and you can see, as we have said, the moment you go to a lower time frame, if you can't see the head and shoulder or the double bottom, you want to see the hammer candle. And this is what you get to see here. Look at this. This candle showing up here on our lower time frame, on the weekly time frame, means that sellers when controlled and immediately press ups on the demand, and the demand hold it stronger. Price goes almost at the opening. When it closes, then you have to see this high speed candle showing up. This means that when this candle shows up, this is an institutional candle, and by default, this becomes our first demand here, right? This becomes your first demand. But this demand has already been consumed by this. So whatever is left here, we cannot be able to tell any other reversal pattern you might have here, but we just want to start seeing now on the daily, the impulsive and the correction moves and all supply zones that are nearby to be destroyed and the new demand zones to be created. So when you go to the daily time frame, you can see this is how the price was approaching the level, right? Impulsive correction. Impulsive, because this one is a strong low that's lower than this one, right? This is a strong high low, but this is the weak lower low. but it's lower than this one. Price creates a new correction here. There's nothing much here. Then we have the price dropping on the level. So this was an impulsive. Look at this, impulsive correction, impulsive correction, impulsive. Then all of a sudden, price creates this one as a correction, which was supposed to respect this pivot. Price goes a little bit lower, and boom, creates something like that. So at some point we have, here we have impulsive. This was supposed to be a correction, which was turned into a correction again, and a new impulsive was created. So in short, what you're having here on a bigger picture scale, on a scale of a bigger picture, drop, rally, drop, rally, drop, then the rally is here because this one is inside this high and this low. So this is the main move. So this was impulsive, correction, impulsive, correction, impulsive, then the new correction. I mean, the new impulsive, which was supposed to be a correction, turns into an impulsive, which means that the market has already destroyed the supply that was here, and right now it's intended to go higher. So look at around this area, we don't have any supplies on here. The last mitigation was done here. So here, this means that when price goes higher, automatically maybe it needs to go all the way down here on this base, right? And this, we are going back inside the range. So here we'll say, here we have our supply, and on the current price here, looking at this, market sort of left a small base, which was a small demand zone here. Okay, let's see if this demand is still there. Okay, this demand is not mitigated yet. We have a demand zone that is still fresh here. We have that demand there. And then we have on the daily time frame, if we work with the daily time frame, then we have rally, impulsive, correction, then and impulsive. Around this area, we have a very strong demand here. So you can say this is the last pivot that we want to see price respecting. That it's likely to peep into this one, but more so we have to focus here. So here I'll say, I'll do this. If I zoom in, because when I zoom in clean, I notice that this area is not yet. Is it really tapped? It's not yet tapped, as you can see, still there, but we're going to focus on the base of this area. Pivot point here. Allow me to remove this part. So you can say this is our demand. Yeah, and on this demand now, depend on how you look at it, because in terms of freshness, we're supposed to go with this one, right? This is the one that we're supposed to look at. But if you look at this one keen, once we have this U shape here, there's a zone that is inside here that should be tapped. So I'll prefer not to focus on this one, but I'll still look into this leg. Yeah. Take the low, and here I'm looking at this as an entire zone, but here now I might not be able to get this area clean. That's why you have to use a different website. Let's see, we go here. And on this one, because on this one we are looking at the dollar on a daily time frame. So let's come here and come up with that area. It's more refined, very clean. So here I'm looking at the 22 hours time frame. If I go to daily time frame, look at the daily time frame. This is the dollar, and this is the demand that I'm talking about. This is the demand that I'm talking about. So when you go to 22 hours and we look at this area, you're going to notice that on 22 hours, we have a level, a zone that's all the way down here. But currently price is reacting from this particular demand here. But I don't want this one. I want the one that's a little bit lower. It's more stronger. So let's look at 18H, 10 hours time frame. because we want to come up with a realistic level. On 18, price giving us this as an entire zone. Don't need that one. Let's look at the 16 hours time frame. You can compare. You need to know 16 hours, 14 hours, 12, 12. And on the 12, when I go to 12, I get to refine this area a little bit. Yeah. Okay, this way I have the base. I don't like this demand here. So go to 10. 10 and 12, there's no big difference because the 12 also can give us a zone, but 12 hours has not changed anything. 8 hours. It was there's nothing. 6 hours. And the 6 hours is still a base looking good, as you can see. And this way we want the dollar going all the way down there. So from there, then this means that on the 5H, look at the 5H. The 5H, nothing's fresh here, nothing's here. And lastly, going to make a decision in this one. So there's nothing new. So of course we'll just work with the 22 hours time frame. The level that was on 22 hours is more better, or it's more refined up to here. So you can say the dollar around 97 to 7, 97 to 7, 97 to 7. 97 to 7. $207. Yeah, almost down there, but I don't like it. Yeah, almost down there. So you can say we have a refined level down here, which you can say, can give it a green color. But I don't know if the imbalance is gonna start down there. So I'll just have this as a level to watch. And this as my demand. There. So here, this means that on this particular, okay, that color is okay. So on this, on the dollar, we are likely to have, because you can see what I was telling you, like, when you look at the market, you'll see a lot of things. On this one, I'm sure now, you can see away from the technical point of view, you can see some reversal gears here. The left shoulder, the head, the right shoulder, then price goes higher. That's what takes at the head, what we call the neckline. For those who know the neckline, and price just goes back to a demand, and you expect to get something like this, right? So this is just ideas that I tend to share. You see, this way the neckline was broken, all right? So price can return here, and we look forward for a long position from the key level here. And still on the key level, we can still see this type of a candle, right? That one is a hammer candle, a very strong one. So this, I don't know if the imbalance of this price will start immediately on that demand, or the price will have to go all the way down there. So if this is what you're looking at, then definitely know what to do with the remaining pairs, the euro, the GU, the Australian dollar, the New Zealand dollar, all of them. You have an idea of how you're going to deal with them. So this was just an idea that I wanted to share, and you can drop your comment, your suggestions. You can see what you can do in our next video. So that's just an idea, guys, and also have a great trading week ahead.